we are ready to get going here, Annie.
Hi, good morning, everybody. Welcome to our final Zoomed in of 2021. And my final Zoomed in is your president. So just want to take a moment to thank you again for the opportunity to serve you this year. It was an interesting year, as they all seem to be now. And I'll be turning the reins over to my successor, Laura Clemens. So thanks for all participating this morning. I'm going to turn it over to Ryan to say a few words about the market and to introduce our guest speakers today. Ryan.
All right, great. Thank you. I'm going to have a couple updates for you before we get going on everyone else. So let me share my screen and we'll get into some of the things today. As always, this is the everyone seeing the right screen, Charlotte? All right. As always, we're glad to have the Cooperative Bank Cape Cod as our sponsor for the Zoomed In on Real Estates. Couple things, our CE schedule for the rest of the year, new class that's online webinar on today at 9 o'clock, I guess, if you can't really get on it now. I pulled the calendar, so today, yesterday, so I have this on there. But Thursday we have live at our office class, RPR and how to use RPR for CMAs. And then we end the year with 3 code of ethics classes, 1 at the office and 2 online live Zoom webinars. Reminder, if you have not done your code of ethics, you need to by the end of this year. For the last 3 years is the requirement to maintain membership to take code of ethics training. So please, if you would have probably get emails and phone calls and text messages from us if you have not taken it. So if you take it, you stop getting messages from us. So please sign up for one of those 3 if you need it as well. Also save the date for January 19th through the 21st. Virtual will be 9 a.m. to 1 p.m. every day. Our seller representative specialist designation we're providing. It'll be $195 if you register by January 5th. By January 5th, we'll have signups hopefully next week for you. After that, the price will go up to like $225 or something like that. So save some money, and I'll have CE with it as well. So you'll be able to knock out a lot of your hours for renewal as well if you take that. Tomorrow, we have at 1 p.m. Eastern time, we have the Real Estate Forecast Summit from the National Association of Realtors Research Division, and it should be really great. I know Christian will be on that, probably definitely taking notes. But tomorrow at 1 o'clock, I'd register now. Marissa will put the link in the chat for you there on how you can register for that Real Estate Summit. The other thing is the loan limits. So Charlotte, the Cooperative Bank Cape Cod, we have here the new FHA loan limits. We talked about a couple months ago about what we anticipated them being. They actually were higher than we even anticipated. 647,500 for Barnstable County, 970,800 for Martha's Vineyard, Nantucket. Which, you know, please explain. Most people would know, but what these loan limits mean for buyers.
So this is amazing increases that we're seeing, Ryan. What it means for buyers is that they're able to obtain financing for these higher priced properties we're seeing in the market using conforming loans. So as a point of reference, a first-time home buyer who only needed to put 3% down could buy a $660,000 house. If you're buying a primary residence with 5% down, you could be buying a $680,000 home using conforming loan limits, which typically is a little bit easier to qualify, less paperwork, and sometimes better interest rates. So it's opening the door to our home buyers for better financing and easier financing. And
yeah, I mean, it really does seem like that. I mean, I would assume more people are taking advantage of it now. And maybe have you had a lot of more interest back since these been announced, or are people recognizing it yet?
We are recognizing it. We've been lending to the projected $625,000 loan limit since that was forecasted in late October, early November. So now we're going to be reevaluating to see what we can do for our customers who might fall up to this 647.
The downside is that these were justified in the fact that median sales prices increased this much and pricing people out of the marketplace. So that's the downside of it. But then, you know, the federal backstop and the goodness and the work NAR and everyone else does in the housing world federal, make sure that this keeps up with it. So
Exactly. And I think it keeps the threshold to entry at a reasonable level on these higher priced properties, which is so important for our home buyers and our Cape residents.
all right, anything else on that conventional? I mean, the other thing is if you did find them too, is I'm hearing a lot, at least right around off Cape in that market where you're seeing a lot more of where you have a lot more multifamily. These multifamily limits are huge for this end. I mean, obviously on the Cape, we don't have a lot of that, unfortunately, on the 2, 3, 4 family units. But right off Cape where there is some a lot of people are taking advantage of it. I know, especially in this first time home buyer market where I'm hearing like in the Fall River, New Bedford, up to the Wareham area, you're seeing a lot of people take advantage of buying 2, 3, 4 family as first time home buyer.
And the best thing about those loans, Ryan, is that people can use the rent on the other units to help them qualify for the mortgage. And if they're using an FHA loan, they could be putting as little as 3.5% down on a multifamily, which is just amazing. It's a great way for people to get into their houses and help the houses pay for themselves.
All right, great. And I want to stop sharing my screen and invite in Alyssa Magnata, the CEO of the Housing Assistance Corporation. We're going to talk a little bit about a new program you guys are launching. So Alyssa, thank you very much for joining. I think this is going to be an interesting program where we're hoping that our members will direct either home buyers or owners even to you guys for resources on this. So Lisa, you want to talk a little bit about what you're launching and why?
Well, piggybacking on your conversation with Charlotte, right? We're always looking for ways to help our year-rounders find the affordability and in a home or be able to stay on Cape. And I think our agencies are allies that way, right? Where we're really concerned about the year-round community and the year-round economy, but also keeping that balance of our second homeowners and the need for our seasonal economy to have those seasonal rentals. And so
the underlying belief, I think we forget about this too much, and you and I even forget about this too much. The underlying belief that our two organizations really believe that home ownership can transform lives.
Absolutely.
You know, and that home ownership is it creates more stable communities and creates more stable lives, and that path to home ownership, which is tough to get to at times. I think a lot of us in this business take for granted that, and the work you guys do on that.
Yeah, I mean, we are focused on trying to preserve the year-round community, and so we're looking at housing from a couple different perspectives. And the ADUs is an area when we could start changing the bylaws so easily in the towns and start opening up the market. We wanted to try to create a program that would incentivize homeowners to add on those ADUs or to legalize an ADU. So I feel like, we all know, right? We have a housing shortage, and we also have a shortage of a diversity of the type of housing. We need more apartments. So we're hoping.
And that one thing is that, our two organizations together for the last several years have worked, and we've been successful in changing the bylaws around accessory dwelling units, which are like the backyard cottages or a section of your home that's a legal apartment in 12 of the 15 towns now on the Cape. To make them all by right. And so it's been a big effort. A lot of organizations have come together on to push this. And so now that we crossed that threshold, 12 of the 15 towns have done it, and the big one being the town of Barnstable, right? Has done it. You guys are now launching a new program around accessory dwelling units to help homeowners actually create them. So what are you guys offering, and what can they do? I'm not sure if you want to get into your presentation.
Sure. Marissa, do you want to? Yeah, thank you. So we've worked the past year to try to understand why people build an ADU or why they don't build an ADU, and what those obstacles are, and then create a technical assistance program to help bring more units online. And so at our agency, we look at the housing market holistically. We look at all the problems. We look at the affordability gap. We look at the lack of apartments, and we are, as Ryan said, really advocating for bylaw changes and trying to go against those NIMBY groups. We're looking, our biggest quandary is when, the medium wage can't afford the medium priced house, right? It impacts our workforce, our economy, and impacts all of us who are trying to live here. And that lack of inventory, we know we can't just build our way out of it. We have to think differently about the single family homes that are already here. And the NIMBY,
it would really, it would be bad for the environment. It has been bad for the environment, building one house on every
every acre.
1 to 2 acres, right?
Exactly.
It has cost us, it's going to cost us billions. That past bad planning is going to cost us billions in wastewater improvements now. Exactly.
And so, adding a smaller unit on an existing home is really low impact on the environment. And doesn't change the look and feel of a of a neighborhood. But the other thing we're bumping up against in our region is a very active culture of people who are against housing. And so our agency and our agencies together are really trying to rally advocates and trained leaders who can speak up for housing. So those are, when we look at housing and talk about housing in the community, we look at the whole picture and those three components primarily. And so we're building housing. We're not just looking at the ADU program. I just wanted to take a minute to show you we have these 4 projects in development right now, over 100 units in pre-production or production. And so that's a main focus of what we do is, again, try to add housing and build housing. And so when we started, again, looking at the single family homes, we decided, so you can go to the next slide. Yeah, thank you. We wanted to look at the options of ADUs. So the ADUs, right, what is it? What does it mean? Where is it placed on the property? And what we did is we took a step back. You may remember our Rent 365 program that we started a couple years ago, which was really to incentivize homeowners to use their home differently. If they were a seasonal landlord, would they convert to a year-round lease? And what would it take to convert to a year-round lease? And what we did is we went back to those homeowners to try to understand why they either leased up year round or why they didn't, and used that information to inform this program. And so I just wanted to take a quick minute here to show you what ADU options look like. They can be detached, they can be attached, they can be a walkout garage, they can be a walkout basement, they can be above a separate building, like a garage that's separate. They can be a separate building altogether. So there's a lot of interior options and exterior options. The next slide. Thank you. So in our conversations, we wanted to look at what are some of the benefits? Why do people build ADUs? Why are they a good thing? And as Ryan astutely pointed out, right, it maximizes the existing single family homes, which we have 82% of our homes in the region are single family, right? How do we optimize that product that's already in place? It blends into the neighborhood. And they also give passive income to a homeowner. It's really a very good investment strategy for somebody to optimize their primary investment. For most people is their home. How do they bring in some passive income? How do they increase some equity in that real estate and make it a community benefit as well? So there's a lot of community and personal benefits to accessory dwelling units. So then it becomes kind of this question of, well, if they're so good, why aren't there more of them? What's happening? And what we learned is that people did not know how to do it. They didn't know where to begin. They didn't know even what the bylaw requirements were in their town. And then another big obstacle was financing. And what we learned is that before we started working with COOP and Cape Cod 5 to develop this very specific ADU loan product, which I'm hoping Charlotte will talk a little bit more about, that people had to qualify using their own income or take out a HELOC in order to get this get financing to build out an ADU. And what the COOP did is they decided to create a loan product that would be advantageous in the community for a homeowner, so that they could look at the future rent, they could look at the future value, not just what was existing. So it really is going to transform the market and give a lot of options to homeowners on how they can finance this product and finance
Yeah,
these.
we'll get to that financing thing. And the other key piece is National Association of Realtors has been really helpful, and actually some of our questions and some of our pushback has spurred Fannie Mae to do some work, so I can update people on some of the stuff that they're doing around this too, because I think this is a trending issue we're seeing on the Cape that can be applied around the country too. So
yeah, and it was, so we wanted to try to work with the landlords up front on building awareness, what ADUs are, how they can do it, give them the technical assistance to walk through from what the options on their property all the way through permitting, finding contractors, building out, and leasing through our Rent 365 program. You can go to the next slide, please, Marissa. Our Rent 365 program, we really learned that people wanted help getting the best practices on how to rent and who to rent to and how to pick a tenant and what's a good lease. And of those 28 homeowners that converted to a year-round lease and Rent 365 a couple of years ago, there's been no problems with their tenants. They've all had very good experiences because they followed the best practices in picking.
and that's important because that started right pre-COVID and the pre-eviction moratorium, and they were able to stay whole throughout the eviction moratorium. Exactly.
And the people, when we called the ones who inquired about Rent 365 and asked them why didn't they do it, it was because of the tenant. They were leery of trying to choose a tenant, and there wasn't a big enough financial incentive, right? When you can rent your house out seasonally and make so much per week, especially out here on the Outer Cape, the little bit of the incentive bonus that we were offering didn't make it worthwhile for them. So we now, in this program, we'll be offering up to a $10,000 incentive payment to homeowners who convert to build out an ADU and rent it out year round for 5 years. So we've increased the incentive payment. We've increased our assistance for renting, finding a tenant, and also the technical assistance for walking through the build out of an ADU. So it's translating into hopefully more units. Right now, we have a soft launch and we already have 15 people in the pipeline who are interested in learning more and possibly building.
So a couple things. If you go back to the other slide, I want to be able to help people through this. So basically, if you have homeowner who's thinking about it, about adding an ADU or has a space they need something to do with, contact you guys, and that can be an initial kind of inquiry about this stuff.
Exactly, because what we have to do is we have to walk through what their vision is and how they want to use their property. You know, this is people's sanctuary, your home, right? It's your private space. So we really have to kind of walk through what space are they talking about? How much space do they have available? Where is it? What kind of financing are they thinking about? What's the rental situation? Sometimes it's a family member. Sometimes they want to rent it out in the community. So we have to walk through all those components so that we can understand what it is and then best help them and help them see the financial benefit. We can walk them through the calculator that walks through, does the rental income support the size of the loan that they're getting? And then what kind of surplus do they have beyond that? So we kind of walk through that whole piece initially to make sure it's really a good fit and they're very serious about it.
And then the $10,000 is to help subsidize the construction of it.
Yeah, the construction, the initial costs of permitting, getting an architect if you need one, putting a down payment for a contractor, those kinds. And some homeowners that we've talked to want to do it themselves, so they might be just using that money for building out, buying drywall. They might be using it for supplies. We did a pilot this summer, and a house in Orleans did a build out of a garage that was under the house, a walkout, kind of a walkout basement, but it was a garage. And they built the ADU, a 1-bedroom, I think 550 square feet for $30,000. So and now can rent it for $800 a month, right? So they,
And I want to give credit where credit's due. The $10,000 and then the funding for this program is coming out of, you got a line item in the ARPA, in the state ARPA money, from led by Senator Sue Moran and Senator Julian Sear, right, to get this money into this program.
Yeah, so we've been building this program and the technical components for about a year, right? We've done a couple pilots. We've talked to a bunch of people why they did it, why they didn't do it. We hadn't officially launched it because we were in conversations with the senators trying to line up this incentive payment that we can offer to homeowners. And thankfully, the senators really saw the vision and really understand the need for housing, and especially for smaller units in the region. And they advocated at the State House for us to get $500,000 in order to pass that through for incentive payments. And we've heard that the governor signed the bill, but we haven't seen what all of his vetoes are yet. So we're fingers crossed and, prayer hands that we didn't get vetoed there. Our line didn't get vetoed. I don't think it did, but I can't count the chickens yet. So that's
Until you see money, you're not spending it.
I'm not yet until I have it in my heart. Yeah, but we are working that into our program and our discussions with people. And our primary focus. So this is the next slide, Marissa. Our primary focus are year-round residents. That's the first people we want to help with that money are people who are year-round residents and want to build out that apartment on their property. They're ready to downsize. They have children that might want to come back. They have a need for passive income. So that's our first primary focus, is to help year-round residents, help other year-round residents, and create more year-round housing. So that's who to send to us: clients, people that who might be have too big of a house, have space within the house and or near the house that they
maybe they have nothing to downsize into right now, right? In this low inventory market, right? But they have too big of a house and they're willing to, they maybe want to get some income in that vein, because as we all know, there's not a lot out there to buy on the market right now. Yeah,
so it gives you income and equity when you're building out, right? I mean, you guys know this better than I do, right? When you're building out or adding a bathroom, adding usable space, it's gonna add equity into your primary investment, and it's going to also add passive income, as well as help someone else.
And then you'll also help the homeowner understand the bylaw in their town, because every bylaw is a little different on what you can do and what you can't do, even though we tried to make it as uniform as possible.
Exactly.
Every town wanted to change a little bit, and you'll help them through that process, kind of evaluate that on that need.
Yeah. So what we do, the first is a phone call where we walk through and make sure that it's financially feasible, make sure that there's that our goals and their goals match, that what they want and what they think they want is achievable. Then we go out and do a site visit. At the site visit is when we pull their Title V, we look at the town bylaw, and we figure out what is actually doable on their property once we know what they're trying to achieve. And from there, we make plans to move forward. Or honestly, it could be the situation of like, they're not ready now, or they don't want to take the risk now. It's really case by case, right? You got to walk through.
And just to remind people, so prior to the last several years' effort, most towns had an accessory dwelling unit bylaw, but they were restricted either for family use or for affordable housing. Big A affordable housing. And 12 of those 15 towns, with the exception of Yarmouth, Dennis, and Bourne, have removed those restrictions and allowed them there. We do have a question. The one thing you do need to know is that if you have existing homeowner association regulations around separate units, those still apply. The towns don't change the homeowner association regulations.
Yeah.
So the other questions come in is, do you have education for prospective tenants around also, like you're doing landlord education, right? Are you doing tenant education at all as well?
Yeah, so that's a great question. And so we do have a tenant education program, but the other funding that we got, which we won't be launching until until 2022, January, February 2022, that we also piloted over the summer, which these two programs dovetail perfectly. And I'm so glad that Senator Sear and Senator Moran really saw the vision of putting these two earmarks together and funding for these two programs. So remember in the beginning of my presentation, I talked about the affordability gap, the inventory, and the NIMBYism and advocacy. Well, so ADUs are for the inventory side, right? We have a supply problem. I also created a program that's for the affordability gap, and we created a new shallow subsidy, it's called, where we will help people who are childcare workers and people who work with developmentally disabled with rent, about $400 a month. And along with that goes coaching and goal setting, and the coaching and goal setting are required in order to get the money, right? So it's a really, in the pilot that we did, we saw phenomenal outcomes. People got out of debt, people saved money, people moved to different locations that were more affordable long-term. And the reason I'm bringing this up, because I see your question, yes, the education component. The reason we are focused on those two audiences is because we want to match them up, the childcare worker and the disability worker, with the potential tenants for these units, because they are all quarried and sorried and have full-time jobs. And so it really does start to address some of the, and they are working with a housing counselor every single month to make sure that they retain their tenancy and retain good standing. So
and that's also one thing you and I have talked a lot about, how we can better educate landlords and our members and even real estate licensees that aren't realtors around, because one of the biggest things we've seen around the violations of Fair Housing Act has been in the rental world. Children, handicapped, lead paint, issue based on the children, right? Like all that stuff, or just the massive amount I see of people doing wrong on security deposits, just the stuff that people will try to put in place to try to restrict people, good tenants, from being good tenants. And so there's a lot of education that needs to happen around that.
Yeah, absolutely. Absolutely. So in this program, they are working with the housing counselor to make sure that they are paying their rent on time, that they're participating in that agreement with the landlord, so that there's a good relationship.
And we had a great question I wanted to ask you about is we know we have a lot of non-permitted units out there. And so will your program help those non-permitted units get permitted in their towns if they can and come into the thing?
Yeah. So the way we're evaluating who to give the bonus to, the incentive payment, are the ones that we can bring online the fastest. And the ones that are not permitted, that need to be, something needs to be fixed up or coded, or go to the town and advocate, whatever the situation may be, those to us are the fastest we can bring online and to make legal. So they would be eligible for some component of a bonus. The units that are in the interior of a home, like taking a floor on the up above or taking out the basement, those are other ones that we believe we can bring online faster than a separate building. So we would prioritize
around why and I want to be clear, you said your focus is on year-round Cape Cod residents, not that it's necessarily restricted to just those homeowners, because some of the town bylaws do restrict them to having to be a year-round resident. We really push back in those bylaw conversations because I think we all recognize that second homeowners on Cape are more likely to want to do that. more likely to have the means to do it
The
as well.
funding, yep.
And I think that's where your focus is on year round, because you're providing actual money, and you don't want someone who has a $600,000, $800,000 second home to have to, be getting money when year round Cape Cod residents could begin at 10 grand. That's why your
Exactly.
focus is on that, but you're willing to help anyone who wants to create a year round housing unit.
Oh yeah, the technical assistance part is open to everybody. And we have several of our donors who are very interested and have said, like, we don't want your money. We just want to know how to do it. We just want you, and we want the relationship with the bank, right?
Yeah.
So Cape Cod 5 has gone as far to say that if they're working with us, they will expedite the loan, and they will make sure that they're looking at the whole entire product and situation of the homeowner differently.
Charlotte, I know you want to answer that first. The COOP will expedite it too, right? As well.
Yeah, 100%. So we're so excited to be partnering with the Housing Assistance Corporation on this. And Melanie, it's a great question about the second homes. We're offering financing for second home owners if they would like to not dip into their pocket and finance the ADUs in addition to financing for primary home.
Charlotte, let's talk about this on the financing side, because you and I talked, and Lisa and I talked from early on, and I said financing is one of the big hamstrings.
Yep.
Because there's really like there's kind of like a couple ways financing really plays into this. One is actual construction of turning a portion of your house or building a separate unit or whatever else on your property already from that financing side. One is buying one that has one permitted, or renovating to have one permitted as well when you buy, that kind of financing. And then the third, so can you talk through what the COOP's doing and how they're approaching this?
Yeah, we're so excited, like I said, to be able to be doing this. It's one of the huge benefits of being a portfolio lender, because like you said, Ryan, Fannie Mae and Freddie Mac are just not there with this type of accessory dwelling unit, especially when it comes to using the projected rent to help people qualify. So when we were looking at developing this, we wanted to be able to help as many people as possible, and using that future rent is huge. There might be people who want to help improve the cash flow of their home, but don't have the financial means to qualify for the additional equity line of credit, equity loan, or mortgage to take the money out to do so. So our thought was, we can help. We know you're going to be getting the rent. We want to help our homeowners and our renters here on the Cape. Let's give you the benefit of using that rent to qualify. We are doing this on a first mortgage basis, a home equity line of credit basis, and a home equity loan basis, so that someone's already refinanced to an insanely low rate, they're still able to access financing with advantageous terms. We're going much higher on our loan to value ratios. We've got some variances with our mortgage insurance companies on a first mortgage position to go really high. We can do construction of these, so add on your ADU, renovate your kitchens, baths, and maybe blow your house up a little bit higher. We're excited to see what people do with this.
Yeah, no, it's so much flexibility.
The issues with Fannie Mae and Freddie Mac around the lending on this is really on NAR's radar as well, right, Christian? I know you guys are doing it, and in fact, Fannie Mae just did some listening sessions out around it. And from my understanding, it was kind of because our association was asking a lot of questions of NAR policy staff. They were pressing Fannie Mae and really get them going on this issue too, on the lending side. So everyone's kind of working together all the way top down on around this issue.
Yeah, I love how flexible the COOP was in our conversations, and really took the time to understand what we were hearing, what we were seeing, and develop a product that is really perfect. It's in the sweet spot of all the concerns that we had from the people that we spoke to in our groups, and come up with something that really works. It potentially could work for in a lot of different scenarios and a lot of different ways.
And one thing is, most of the bylaws are also restricting a lot of it from renting both units. So you're not going to be able to rent both units. So that takes away the necessity around investment property kind of lending as well. So it kind of puts it into a smaller bucket for the COOP and you guys to focus on, right, Charlotte?
Yeah, I think we're just at the tip of the iceberg right now. We're so excited to get our feet wet with this. And if there is a need for investment owners who are looking to do this, I'm sure we'd be open to accommodating those folks as well, because the more units we can provide, the more secure our economy and our community is going to be.
And so Charlotte, with your portfolio lending around this, are the rates going to be competitive to if they were just doing conventional and everything else?
Yeah, we're offering discounted interest rates for folks who are financing these ADUs. So it's almost more advantageous to get your ADU than a standard portfolio loan right now.
And they're fixed, right? They're not varied interest rates, which is
we're doing it on a 30-year fixed rate for a first mortgage. If someone elected for an ARM, more than welcome to. We have a fixed home equity line of credit, which is huge because the caps on those can be as high as 18% as an industry standard.
Are you?
And that was one of the things, Ryan.
I mean, I would assume most people, Charlotte, in today's market have that kind of equity built in because of how much the market has achieved.
Yeah, 100%. I mean, I have a close friend who bought a house about a year ago, refinanced. She put 5% down to begin with, refinanced with 40% equity a year later. So a lot of people have a ton of equity in their homes. They already have low interest rates on their first mortgages, and the line of credit is a great option to access those funds. And I will say, on a fixed rate basis, the home equity line of credit's amazing because you have the option to pay interest only, or you can pay principal and interest and then reuse those funds for future needs.
So Ryan, in our conversations with our homeowners that were willing to do it, but hadn't, and trying to understand some of the obstacles, having a interest rate that had a variable rate to it, right, that could change and you couldn't adjust the rent, was a huge reason why people wouldn't do it. Like, you have your rent is only so much, right? You can't increase your rent by hundreds of dollars
if the market doesn't sustain it. Yeah,
exactly. So it's a really a great time to be thinking about, again, investing in your primary investment, your house, and figure out a way to make it work. There's really good loan products out there,
Charlotte,
and the rents can sustain it.
Charlotte, what are you guys doing? There's a question about max loan amount for the home equity amount.
So for the home equity under the ADU, we're looking at a $250 limit right now, just based on our projections of what these things are going to cost. We're so flexible though. The ADU might cost more, we could lend more. And on a standard home equity line of credit, if you wanted to use it for the ADU and a number of other things, I mean, we've approved some significant equity lines to the tune of, million plus. But as a rule of thumb, we're at a 500,000.
And there was a question came in about limits on what you rent out for. Under the bylaws in the 12 of the 15 towns, they've removed the limits on what you can rent for, knowing that the market's the limit, right? I mean, that's the bottom line, is that the market will only bear what the market will bear. So for a 600-700 foot 1-bedroom cottage, you're only gonna be able to get so much anyways, that they're going to naturally stay affordable. But there is none of that in 12 to 15 towns. There's none of that deed restriction type of thing. Now, depending on how you meet, but that's the kind of stuff that Housing Assistance Corp and their technical assistants will kind of walk you through initially, depending on what town you're in.
Yes.
Right.
Yep.
So, all right. Anything else, Charlotte or Elisa, on this topic? Elisa, how can they reach you guys for more information?
We put up our website, Hack on Cape Cod. You can go there. You can send me an email at Alisa, ALISA, at Hack on Cape Cod, or call the office 771-5400. And
you're ready to start talking to homeowners now?
Yeah, we already are. Yep, we have a person designated. We're already talking to people, and we'll start site visits in the next week.
All right. And Charlotte, how can they reach out to you guys around finding, and all your loan officers, any of your loan officers know about these programs?
We are all live on these programs. We've been doing extensive training over the past couple of weeks, and ready to start taking applications. Visit us online, mycapecodbank.com, or give us a call, 508-568-3200.
Awesome. I want to thank you guys so much for being here. Feel free to stay on. I want to bring in Christian Hoytstraat from the National Association of Realtors, talk a little about what's going on in DC these days, because we hear so much every day. It seems like something so different. around what's going on, right? Christian, you were here a couple months ago, and we were talking about the threat of what the taxes to real estate in the bills that Congress was considering. I think you're coming with better news now, because I think back then we kind of talked about that we kind of all expected capital gains rates to increase. So you want to update us on what's happened over the last couple months, and then we can talk about what we expect to see going forward?
Yeah, happy to, Ryan. Hello again, everyone. Happy to be here with you. Obviously, the main topic of conversation in Washington over the last 6 to 8 months has been infrastructure. President Biden has framed the infrastructure discussion under the umbrella of his Build Back Better plan. And so just so everyone's sort of on the same page, the Build Back Better broad plan that President Biden had originally proposed kind of split infrastructure into two items. Traditional infrastructure, like what we know as, or what we traditionally know as infrastructure, investments in roads and bridges and transit. And then there was a second piece to his infrastructure plan that included social or human infrastructure investments. So investments in healthcare, Medicare and Medicaid expansion, educational investments like universal pre-K, an extension of the child tax credit, climate resiliency provisions like home energy and efficiency tax credits, et cetera, and also some housing provisions as part of that human or social infrastructure.
Quite a bit of money for housing, actually, right?
What's that?
Quite a bit of money for housing, more than we've seen from the federal government in quite some time.
You got it. So just to give you a lay of the land in terms of where we stand now. So in splitting infrastructure into two, the president was able to pass his traditional infrastructure bill, which amounted to about $1.2 trillion back on November 15th. So that passed in a bipartisan fashion, with nearly 70 votes in the Senate. And so that bill passed and is already law, and infrastructure.
And that had no tax implications on real estate in that bill.
Exactly. That had no tax implications on real estate whatsoever. So that's one piece of the infrastructure, proposal that is now done. The second and last piece that President Biden is focusing on is now this Build Back Better framework, which includes all of those social and human infrastructure proposals. So this is the bill where NAR was incredibly concerned about potential tax increases on real estate, including a cap on the 1031 like-kind exchange program, an increase in capital gains, taxing unrealized gains at death, amounting to essentially the elimination of the step up in basis. And outside of just those major tax revisions, there are a whole number of other smaller tax increases and impacts on real estate that our tax policy team in Washington was also watching. So, over the summer and heading into the start of this session this past fall, NAR kind of, our advocacy team shot into action, put out a call for action among all of our realtor federal political coordinators who liaise with their members of Congress. And we were setting up, meeting after meeting with members of the chief tax writing and financial services committees in the House and the Senate to make sure that they understood what these tax increase implications would have on the real estate industry. I'm happy to report now that in terms of where we stand currently at this day and time, because it does change on a daily basis, every single one of the tax concerns that we had going into the debate over this social infrastructure package have been excluded from the bill. And so there is no cap on the 1031 like-kind exchange included in this bill presently. There's no increase in the capital gains tax. There's no elimination of the step up in basis. There's no change in the tax treatment of carried interest as ordinary income. There's no limit on the 20% qualified business income deduction. All of these things have been talked about as potential, revenue raisers to help pay for this infrastructure program, and all of it is out off the table, thanks in part to NAR's advocacy and also in part to some of the moderate Democrats in the Senate who just refuse to accommodate these tax increases.
Primarily too, from a Massachusetts congressman, right? Congressman Richie Neal, right?
You got it. Yeah. So obviously the way that it works, right? You have the House and the Senate. The House is perceived as more progressive and more liberal than that of the Senate. The Senate is split 50-50, so they need every Democrat on board in order to pass their, the congressional leaders need every Democrat on board to pass their agenda, including the moderate Democrats. So Richie Neal, the chairman of House Ways and Means, the chief tax writing committee in the House, who is from Western Massachusetts, understood that for the House Democrats to put forth a proposal that was dead on arrival in the Senate didn't make sense. So he was able to take sort of that feedback from Speaker Pelosi and Chuck Schumer, the leader of the Senate, and craft a proposal that hopefully would be able to make it through the Senate. And so, yes, you're right, Ryan. Thanks to people like Richie Neal, all of those tax issues, all those concerns were pretty much pushed off the table. And so we feel
for
like
that, you're not, so NAR is taking a better tack. They're not as afraid in the Senate they're going to add any of these tax issues back in.
There's actually the only way these tax increases were going to make it in were via the House, because that's where they had the votes for it. Joe Manchin from West Virginia and Kirsten Sinema from Arizona, the two chief moderate Democrats in the Senate, they are not going to allow for any of these tax increases to make it back into the bill.
And then what's the status? And I don't even know the status. I'm asking this from pure conversation. I know a lot of the conversation has been around the state and local tax deduction cap, which, you know, obviously Massachusetts, I think, cares a lot about. And then just to refrain everyone, this is where in the last tax cut bill the Republicans pushed through under President Trump at the time, they capped state and local tax deductions, state income, property taxes at $10,000. That's really hurt states like Massachusetts from the people being able to claim property tax deductions higher than that. Where's that stand as far as, I know some people were trying to put stuff in that into this bill.
Right. So before Thanksgiving, House Democrats did pass the $1.7 trillion infrastructure bill, the Build Back Better bill. So that did pass the House. So they basically tossed it over to the Senate. In the House version, there is a provision to lift the SALT cap from the current rate of 10,000, as you mentioned, up to 80,000 for all income threshold. There's no income threshold. So for all incomes, you can deduct up to $80,000 on state and local taxes in the House version. Now I will say that there is hesitance on the part of the Senate to basically take the House version and add it into the Senate. What we're hearing is that the Senate Finance Committee members would prefer to see some kind of income threshold included. So I know Senator Menendez from New Jersey has suggested basically an unlimited deduction for incomes under $1 million, whereas Senator Bernie Sanders from Vermont, the chairman of the Senate Finance Committee, would like to include an income threshold of 400,000 and below, and then allow for an unlimited deduction.
You do expect to see some kind of income restriction around the Senate version.
Yeah. I have to believe that there's going to be some kind of income threshold inclusion, simply because of the politics of it. If the Democrats don't include an income threshold, then the Republicans are going to say that they're just passing, tax breaks for the wealthy. That's really how they're going to frame it.
And so it's interesting that the Senate's going to go with the more restrictive version, while the House, which is typically more progressive, just open the floodgates on it.
Yeah, and you can thank people like our members of Congress from Orange County, California, who had a lot of influence on that very high cost part of the country. Katie Porter, who is one of the most progressive congresswomen in the country, she falls on the more generous side of this debate.
Okay, all right, great. Anything else? So what's the latest? I'm sure y'all are having calls daily trying to decide. There's now a Christmas deadline that I don't think you guys don't think that's going to actually happen. So where do they think this is going from here?
Yeah, so the way it stands is Chuck Schumer, the leader of the Senate, He is insisting that they pass this bill before the Senate. But anyone you talk to on the Hill sees no path to actually passing it before the Senate breaks for the holiday recess. Joe Manchin from West Virginia is in the driver's seat. He had a one-on-one meeting with President Biden yesterday. He is not committed to voting for it, though he is not committed to voting against it. Senator Manchin has great concern about the rate of inflation right now. He thinks a lot of the COVID relief passed earlier this year and the year prior has resulted in our inflation situation, and he fears that an additional large bill passing Congress, infusing the economy with more money, would only add to that problem. And so he's really trying to push Senator Schumer to look at maybe January or February for passage of this bill, and he's still pushing for a pared down package. So rather than 1.7 trillion, maybe a smaller package around 1 trillion or less. So one other thing I did want to mention, Ryan, just with regard to housing. The House version of the bill does include 150 billion in affordable housing provisions, including which would supposedly result in the construction or rehab of more than a million affordable homes. There's also some investments in rental assistance and housing vouchers. I should also mention that there's a $10 billion down payment assistance program included for first generation home buyers. So basically, first generation home buyers, so people whose parents weren't homeowners, would receive up to $20,000 in down payment assistance for a home. So, but again, these are issues that are included in the House version, and depending on what Senator Joe Manchin wants from West Virginia, some of this stuff might get carved out. So it's kind of a wait and see situation.
Okay. What else? Anything else from on the federal radar, federal issues radar you want to kind of talk about and bring up?
Yeah, so other things folks may be hearing in the news are government funding as well as the debt ceiling. Folks should know that the government has been funded through February 22nd, 2022. That includes the extension of the National Flood Insurance Program.
That's what I was about to ask. Is NFIP tied to government funding still, or are they separate extensions?
You got it. Yep. Anytime government funded is extended, NFIP will be extended. So right now that'll take it through February 22nd. Congress will have to come back and make sure that government is funded again. Hopefully likely what will happen is once they come back into session in the new year, they'll come up with some plan that'll get the government funded through the midterm elections. Same with the debt ceiling. The debt ceiling, there was a fear that Mitch McConnell on the Republican side and Chuck Schumer on the Democratic side weren't going to come to an agreement. They actually were able to strike a deal that will allow the Democrats to raise the debt ceiling to a fixed amount. That was one of the issues that Mitch McConnell was pressing. He didn't want to just raise the debt ceiling for an unlimited amount. He wanted a fixed number, basically, so they can say that the Democrats are asking to borrow money up to a specific amount. And so that deal is on the table. The House and Senate will vote this week, and the debt ceiling should be raised through early 2023. So that issue is pretty much off the table.
All right, and then you brought up something good I want to promote as well, talk about too, is I think both you and I are looking for feedback from our members if they have any around how Risk 2.0 is going for the flood insurance. And we have a whole resource directory and a webinar you can check out for those that missed it from this on 2.0, which is the new flood insurance policies from the NFIP, how they're rating policies. But I think both you and I are both looking for feedback. Are the clients seeing rates go up, go down? What's going on out there? I think that's really where NAR is looking for right now, is feedback from members about how it's going.
Yeah, for sure. Just so folks are aware, Risk Rating 2.0 went into effect on October 1st this year. And so these changes apply to new flood insurance policies. Most existing policies aren't going to be affected until after April 2022. So existing policyholders have been able to take advantage of any premium. Will have been able to take advantage of any premium decreases. Since October. So again, we're waiting we're waiting to hear feedback. and certainly our policy team is open to that and has a direct line of contact with FEMA. The director of FEMA actually attended our annual conference and was there holding listening sessions. So, you know, if you have feedback, give it to us, because we'll get it right to FEMA.
Yeah, that's one of the interesting things that I don't think our members recognize as much, right? Especially on the regulatory side, we talk so much all the time about legislative policy, but whether it was the ADU feedback around Fannie and Freddie, whether it's, you know, NFIP programs right to FEMA, NAR staff's always in touch with the regulatory side. So there's ways to move things that may just be how people interpret things, or small policy changes that can actually make a real difference in homeowners' lives.
For sure.
And you can connect them with, if they reach out to you, if they have something, you can connect them with the right policy staff around that stuff.
Absolutely.
All right, anything else from the NAR federal issue side that we're not hitting on? Anything else? Is it pretty much after Build Back Better going to kind of stop a lot because 2022 midterms, and then people are going to turn focus to that? Y'all expect anything to happen after the so-called soft infrastructure bill?
Yeah, I mean, Build Back Better is pretty much it. Unfortunately, you know, once we head into the election year, that's where the focus will turn in Washington towards the election. So, you know, we may see action on Build Back Better in January, maybe February. Outside of that, there's not much on the congressional agenda, simply because elections are coming up, and, you know, Democrats just don't have large enough margins in either the House or the Senate to really get any further, you know, policy issues through without, you know, bumping right up against the Republican filibuster in the Senate. So, you know, we may see some regulatory changes and adjustments through the agencies, but don't expect much out of Congress in 22.
Okay, great. And really the conversation, the big issue that's been out there for now 12 years, right, about reform of Fannie and Freddie, not going anywhere anytime soon either.
No, there's no oxygen on the Hill to really tackle any of these big items right now, unfortunately.
All right, well, thank you so much for joining us, Charlotte. Thank you so much for joining us as well. Lisa just had to walk off. Thank you for the opportunity. Reach out to the Housing Assistance Corporation, hackoncapeCod.org if you have any questions. Charlotte, I'm sure you'll drop your contact information in the chat perhaps, and Christian, they can reach out to you as well at your email address, if you can drop that in the chat for everyone as well. Thank you all for being here today. And I might have one question coming in. So one question was about any financial help or tax deductions for people to do improvements to reduce their flood risk, like lifting the house, improving the foundation. There are some FEMA grants around that as well, for flood mitigation as well. So they can start with FEMA. That person that asked a question can reach out to me. I know the state's got some programs as well in resiliency, but FEMA definitely does have some grants available for people to help on repetitive flood properties and things like that. So reach out on that, but that's always something to help more with. All right, well, thank you guys very much, and appreciate everyone taking the time today. And we'll have this out to you guys with all the links and the presentation from the Housing Assistance Corporation by the end of the week. Thank you guys very much.